It's a trap!
So, will the market rebound this week? Hi, Jonathan here. Today is 23rd of May 2022. The time right now is 1:20 a.m. And this is going to be a detailed analysis of what's going on in the US market, which will affect the Europe market and also indirectly the stocks and Asia. So let's take a look what happened. What's going to happen this week? This week is going to be a very, very busy week. Mainly because not only we got federal meeting minutes, where remember the last time when it was 1,000 point up and then 1,000 point down? Well, yeah, that's going to happen again this week. Okay, and Uncle Powell is speaking again this week. You remember the last two times he spoke, market rebounds, then market collapse drastically. And then we still got a little bit of retail earnings here and there, but what to watch out is Walmart, okay? Because Target, remember last week the earnings was very bad, dropped 25%. So everyone is going to watch Walmart. Are we going into the bear market? S&P touched the 20%. So technically we went into the bear market, and then on Friday we rebounded and down 19%. So it's just at the borderline of that 20% close. We did go lower than that 20%. We still got economic data and also the PMI numbers. So let's take a look at the calendar for this week. This week, Monday, quiet. Okay. Tuesday, okay, we got the Germany PMI, but Tuesday night, early Wednesday morning, Uncle Powell will be speaking on Wednesday, 12:20 a.m. GMT plus 8. Remember the last two times he spoke, market went up, then market collapsed. This will be the third time after that last two times. I won't be surprised is maybe when he starts speaking, the market drop, but I'll be watching to see whether will there be a opposite movement. So that means if when he speaks, the market drop, that will be a good sign, because then the next day maybe market rebound. Who knows? Because the last time, the next day, market dropped tremendously after he spoke, the day after. Okay, so be watching that. And then we got the ECB, Christine Lagarde speaking also. Then Thursday at 2 o'clock in the morning, FOMC meeting minutes. Now, already mentions that half point increase expected for the next few times, 2 to 3 times. Then what we are interested is what's going to happen. Okay, and then on Friday we got the price index, PCE price index numbers. So this week is going to be a busy, crazy week. Okay, now let's take a look at S&P. S&P, we broke, we collapsed all the way down. The last week and the last 2 to 3 weeks, the bulls have been trapped and the bears are now being trapped. The trap was sprung on the very last hour of Friday. So now watching to see whether are the bears trapped right here. Okay, if you take a look, we had S&P a lower high. A lower low. This low is lower than this low. So technically, you should expect that the VIX should be a higher high, but VIX didn't have a higher high. Okay. Now, if you ignore this one upper shadow spiked, if you just ignore, just maybe close one eye, ignore, you'll notice that there's a shoulder, there's a head, and there's a shoulder, provided you ignore this one price upper shadow. And you notice that there is a nice neckline support right there. So this week is going to be a lot of things to watch, which I have to give it to you one by one in pieces. Then you can put in the big picture. All right. Now, the big news, of course, Tesla, because of the Twitter, he's been making lots of noise, and the price of Tesla, not that good. It broke through that support of 700, and right now watching to see whether 650 round number can be supported at a point of time. Okay, now, over the last few weeks, US index, especially NASDAQ, went down a lot. Mainly, one of the reason is, of course, the 10-year bond yields. Okay, but lately, you will notice that the 10-year bond yields form a lower high. And you notice there's a shoulder, head, and a shoulder. There is a head and shoulder in 10-year bond yields. And we actually broke that neckline on Thursday and Friday. This is the US 10-year bond yields. So right now, looking at this, using estimation at about here, we should be at about here, okay, at about here. So if we do drop mainly from here, well, there is a chance that we will go down to the prior resistance broken, turn future support at about 2.5. Okay, and if you watch the 10-year bond yields using the 4-hour chart, you will notice the shoulder, the head and the shoulder nicely formed, and where we test this neckline support, broken, turn, future resistance. So it's a beautiful. So is this a sign that perhaps bond yields right now is going to go lower, which are going to help the NASDAQ goes higher? It is a very, very possible chance. Basically, right now, if you take a look, the CNN extreme fears, we have no more bulls at all. Everyone is extremely bearish. We broke lower than Thursday low right here, support, which means collapse, and then on the very last hour, it rallied fantastically, very, very strong. So in other words, there is a high probability that we should start looking for a rebound right now. If you take a look at the MACD, histogram, the bullish divergence are there. RSI, the bullish divergence are also there. I know last week also mentioned this because it is still there. Okay, it is still there. And if we do rebound right now, the stochastic short-term and long-term, mid-term are also forming the bullish divergence. So a lot of signals are telling me that perhaps this week could be it. Okay, but it doesn't mean that you go all out, because like it or not, this is a lower high, lower low. Okay, but we have a trap. Remember last week I said that it would be great if we go lower than the previous low and then it rebounds. We finally had that. Okay, so now in other words, do remember, whatever I share is my personal opinion. If you like to trade, please do your own due diligence. My first entry to long on S&P will be when it goes above the body high, Thursday body high. That will be my first signal to long, with a cut loss on Friday's low, daily candle. Okay, so that will be a very risky trade, mainly because we are still in a downtrend. Okay, now if you do want a safer trade, that will be a safer trade when we broke through this trend line resistance, or when we broke this trend line resistance. So there are two very closely connected trend line resistance that have to break. Or if you want to be a safer way, let's play with scenario. Okay, I won't be surprised if S&P rebounds, touch all this trend line resistance, come back, and then does this. Okay, or it could be like that, like that, like that. Also same, that two scenario will basically give us a shoulder, head, and a shoulder, an inverse head and shoulder, nice pattern after with a higher low. Then the resistance to watch out for will be right here. So in other words, this will be the resistance to watch out for. If we can go higher than 4094, that will be a good sign. That means risky trade when it go above Thursday body high. Okay, with a anytime near the resistance, watch out. If it can break, then see whether this trendline resistance will become future support, forming a higher low. Breaking this will be a higher high. So that will be a possible scenario where perhaps we have seen the short-term downside, because look at the number of black candles. 1, 2, 3, 4, 5, 6, 7. We now have a 7 weekly black candle. This phenomenon haven't been seen since I think the year 2001 on a weekly candle. Even the flu down in the year 2020 wasn't that bad because there was at least some white candle in between. But this is one of the worst 7 consecutive black candles since 2021. And if I remember correctly, S&P record was 8 consecutive black candle, and there was, I think, once only, and after that there's a few of 7, but there's never more than 8 consecutive weekly black candle ever. More than 8. 8 is the max. So we are quite close to the low. And if we can recapture this last week body high on a weekly candle, that's basically a very strong bullish candle to the upside. So watching that very, very closely. Okay, similar in Dow. Look at that. We on the last hour, look at that massive rally on the last hour. We were collapsing like crazy, then we massively recovered, and we can recover as a white candle. Okay, so I'll be watching the S&P, perhaps taking a trade maybe a little bit above the body, let's say, with a cut loss a little bit below. The only thing is Nasdaq is weak, so perhaps Nasdaq needs the 10-year bond yields to drop, because on the Friday we still close as black candle. Okay, all the signs are the same. We got a trend line resistance. Okay, we have the watching for a capture of the higher, then form a lower high, a higher low, and then break of this trend line. This prior resistance broken, turn future resistance to see whether can we form a support. Now take a look at Russell. When Dow, S&P, Nasdaq kept on dropping, but Russell didn't. And Russell right now attempting to form a higher low. That means generally the smaller counters, they are non-S&P, non-Dow, non-Nasdaq, are trying to recover. So there is a chance that this time the bulls could have felt that the price is low enough for it to go higher right now. Do remember, please watch your risk. The stop loss is Friday's low. Take note. Now, if you watch Apple, okay, daily candle, there is a nice possible bullish candle on Friday's candle. Perhaps if Apple goes higher, there is a chance for the market to go higher. MSFT, Microsoft, also tried, although the body is a little bit bigger. Watching that out, very, very close. Okay, AXP, one of the counter that spots, also formed American Express, a nice bullish candle. There are lots of nice bullish candles seen in a lot of counters on Friday. So there is a chance, there is a high possibility we may try to rebound in early part of this week. But of course, the FOMC can kill this bull, or perhaps FOMC inflation may have peaked. Then they said that perhaps one more raise and we will stop and watch, and that will be a very good news, and the whole market may just rally a lot higher. Maybe. Okay, maybe. But then we know one thing for sure: stop loss, Friday's low, right? So it's a very clear defined stop loss. Yeah, but what if we go lower? Well, we have a clear stop loss. What if we go higher? Well, we have a clear entry with a clear stop loss. So what else are we going to look at? Right? Do remember, this is not a trade advisory. It's just my opinion. Okay? Now, unlike the US market, Europe seems to be a lot stronger than US market. So perhaps this could be a shoulder, head and a shoulder, inverse head and shoulder being formed with a neckline right about here. We are very close. In fact, the resistance are also very, very close. So watching the DAX, watching the London also, because London is one of the stronger index, supported by that 200 SMA and 200 EMA. There is a chance. Okay, there is a chance. Okay, but although personally I'll be watching the US index a lot more than the Europe for now. Okay, China A50, we broke through here. Okay, broke through this neckline on Friday when the US were dropping, and we got a shoulder, we got a hit, and we got a shoulder, higher low. Ooh. Okay, and Hang Seng. Okay, we have a bullish divergence in histogram and also in RSI. So perhaps right there, look at that trend line. We are right there to see whether can we break this trend line to the upside, or we're gonna go lower. So if we do go lower, Thursday low, that will be the stop loss. Okay, so overall, in summary, for indices, we have a clear entry, we have a clear stop loss. One thing we'll never be sure is how far it can go upside. So we just have to watch our risk. So if it does go lower, we have a clear stop loss. Plain simple. What else do you want to look out for? Okay, now take a look at the US dollars. US dollars drop. Can it rebound right now? It is possible. Okay, right now we are looking at this support right about here, 1025, 102.5. If we have a rebound, there will be a very obvious shoulder, head, and maybe trying to form a right shoulder. But the support to break is 102.5. A little bit below, we'll have the 200 SMA and EMA. But let's see whether it can break the 102.5. Okay. Now, if it does break, take a look at the euro dollar. Okay. Same thing. Could be forming shoulder, head, and maybe forming another shoulder. So this will be the neckline I'll be watching for euro dollar. Look at the pound dollar. Very strong bullish candle. I'll be watching this level very closely to go higher and see if it does happen. Okay, and maybe forming a shoulder, head, another shoulder. But what am I going to concentrate right now is also in gold and silver. Nicely, gold went up, and I mentioned that in the daily market analysis, I won't be surprised if gold on Friday needs a rest, small body. If you want to find out my daily market analysis, go to the Telegram, search for Gathering of Traders. Okay, go to Telegram, search for Gathering of Traders. You not only get the market news, majority of you voted to leave the market news right there. We got the real-time trade alert when things happen, and my daily market analysis of what I think about the market every single day. Okay, now I like gold. Mainly, it does this. Is that the line? Yeah, that's the line. Is that the line? Yeah, that's the line. Okay, no, maybe not. Where have I drawn the line that is so nice? Is that the one? That's the one. Nah, maybe that's the one. Okay, where it basically form not a very nice symmetrical. I'll just draw a trend line from this high to this high and this low to this low, and I notice it converge right about there, and we have a trend line support in gold. So this line seems to be a very, maybe that's why it's not accurate. Right there. Right there. Yeah, that's the line drawn on a weekly candle. So we could be at a point where there are two trend lines supporting the gold weekly candle, and we are at that price right now. So in other words, I won't be surprised if we have upside in gold moving forward, but we do take note that we do have to clear this 200 EMA, the yellow line right here. So maybe a possible price go up a little bit, come down, then go higher. So I'll be watching gold price very, very closely. Okay. Now we can easily draw this, and you notice that it actually broke. It actually broke, and we closed above this trend line resistance. And similar also for silver. We also broke that trend line resistance. Okay, now we are at that zone where silver is in the zone of a lot of prior support broken, turn, resistance. So all I need to do is watch out for price to break 2217, break above, come back from a higher low. There will be a good opportunity to find another signal to long. Based upon gold and based upon silver, we have an entry price above Thursday high, right at 21. Well, let's make it $22 with a cut loss on Friday's low. Friday's low is 21.60. So that will be a very clear, interesting entry price for silver. Okay, short-term entry price. Now, in order to see whether what's the market sentiment over the weekend, let's take a look at Bitcoin. Bitcoin today, this is Bitcoin today, somewhat bullish on a Sunday. So perhaps there will be risk on. That means people are willing to take the opportunity to try some luck being bullish. So there is a chance that perhaps with what's being seen in Bitcoin, yeah, perhaps the market can be bullish, world indices, but it doesn't mean that I'll be bullish in Bitcoin, because if you notice, the Bollinger Bands are squeezing, getting squeezed. Not a surprise. Look at that. For almost 3 weeks after the price collapse, the price of Bitcoin hardly moved much. So Bitcoin, if it hardly move much, it's actually not a good sign, because it can form a bearish pennant. And if it does form a bearish pennant, easily from here to here is about 10,000. I won't be surprised if it dropped another 10,000 below, maybe to about 20,000. Who knows? Okay, but whatever it is, if it break the support at 28,000, just be very, very careful. Okay, so overall, I think this week, last week, bloodbath could be the turning week. This week could be the turning week. But however, if the price couldn't go up and still continue to go even lower, well, this week will be the 8th consecutive week for S&P to be black. And historical wise, we have never gone more than 8 consecutive week black candle, weekly black candle. So I think we are near. If not early part of this week, it will be at most next week. But then, hey, this time it could be different, isn't it? So, but watch the price very closely. My money is on this week, watching it very, very closely. Till next week, Jonathan signing off. Stay safe. Bye.